I think we cannot remain insulated, and that's how I think to some extent the numbers would have got impacted, which we are going to share with you through a detailed presentation very short while from now. Nevertheless, there has been certain achievements, and we have been able to bring in some certain positive things in the operations, the way we were operating the business in Bank of Baroda. To start with, I think the most important thing that has happened during the year 15-16 was to move on to the average business growth from the terminal business growth. And I'm happy to share with you that the numbers have grown very consistently of the business on an average basis. The actual numbers will be shared by my other colleague very shortly. We had taken a conscious call of running down the unprofitable assets and liabilities. We did it in a very conscious manner. To give an example, I think over the last year's time, we were able to bring down the high cost dependency on the high cost deposit in a very big way. As of now, perhaps the high cost deposit in our kitty is just 1,600 crore, which is minuscule. One more thing that we have been able to achieve is we were able to contain the fresh slippages on a quarter-on-quarter basis. Q3, I think it was the peak time. Q4, we were able to contain it. But at the same time, we were able to ensure the recovery and upgradation of very high order. I think the aggregate number is around 3,200 crore of recovery and upgradation that we were able to do just in one quarter, that is Q4 15-16, which is much higher than what we were able to do on an aggregate basis of the last 3 quarters, which we did up to December 15. What I mean is that there was a continuous focus on recovery and upgradation, and we would continue to have the similar focus and similar efforts even during the Q1 and perhaps maybe even Q2 also on the collection, so as to bring down the NPN numbers to a comfortable level. One more glaring achievement is that we were able to bring up the provision coverage ratio from 52% to around 60.11% as of as of March 16. I think which is very comparable when you compare it amongst the peer banks, which have already declared the results so far. Apart from whatever that I have said here, we still believe that the bank is very strong for the reason that even after translating whatever the final number that we are going to share with you, our capital adequacy ratio in terms of Basel III as of March 16 is about 13.17%, and within that CET, what we call the core capital, is over 10%. So I think these are certain achievements that we have ensured during the year 15-16, despite the fact that the time was really challenging for us. And while doing so, we have also ensured that we have grown consistently on an average basis. I would now like to share with Mr. I'll request Mr. Narang to share with you the detailed presentation, and thereafter we'll take your question and answer. Thank you very much.
Thank you, Mr. Mehta. He has already given the brief introduction of the results and the salient points of the results, for the numbers of which we will be presenting. So, respected Shri Jai Kumar, our MD and CEO, our Executive Directors, Shri B.B. Joshi, Shri Mayank Mehta, our General Managers, Chief General Managers on the dais, and our colleagues from the media and press. Welcome to this presentation of Q4 results of Bank of Baroda. The salient feature of these have been already explained, that in terms of the business growth on average basis, the bank has grown and have moved from the terminal to average figures, and in terms of the individual, these features we have already discussed. I will go through with these features again as we move to the respective slides. The business performance of the bank for the year ended 31st March 2016, if we see on average basis, now this is the data which is there in this slide is on average basis, that is on daily average basis, what have been the business growth of the bank. So domestic business has increased by 9.40% and international by 2.57%, so that the global business growth had been 7.15%. The domestic deposits have increased by 11.49% and the global by 8.02%. So it is the average business has consistently increased during the year. The CASA deposits have been for the domestic operations increasing to 11.95%. Again, the growth had been, I will say, if not robust, reasonably high as compared to what industry growth has been on CASA growth. The advances of the bank have grown by 5.69% on average basis again for the global advances, and domestic advances have increased by 6.43%. So it is these growth number, the bank has moved from the terminal growth numbers which we are always displaying now to the emphasis on the consistent growth on average basis, and these average numbers reflect the true performance of the bank. If you see the business performance on terminal basis, obviously till last year we had the short-term growth at the year end on the balance sheet, which has not been, in fact it had been unprofitable, and as explained by Mr. Mehta, we have moved now on the growth which is on consistent basis. So in FY16 you will not find any short-term build-up of the balance sheet which happens during the year. So therefore these numbers may not be reflecting the true pictures, and therefore average business growth which reflects the true picture have been presented by us in the slide 1. Same number if we see in terms of the CASA deposits within that, savings deposits in domestic operations have increased by 12.61%, again a robust growth. The international CASA savings have increased by 15.75%, and the global CASA, global savings bank deposits have increased by 12.71%. Again, one of the growth which is above the industry level growth. The domestic current account deposits have increased by 7.70%. The international has some negative growth in terms of the current account numbers. Mainly bank had been in terms of compliance issues very I will say alert on account of the compliance of certain territories. We have shut down deliberately these deposits. So therefore we see some rundown in terms of the current account deposits at the international operations. These are the numbers of current account and saving account, again CA and SA, in terms of terminal numbers. In terms of terminal numbers also, we have grown in savings deposits by 5.93%. The domestic savings increasing by 6.11%. The negative figure in current account we explained just now in international, and in domestic also the last mile, the turn up or the build up of the balance sheet has not been there, therefore the negative numbers are there. So true reflection of the business performance in terms of average we have presented. These are the balance sheet, average balance sheet. The total assets of the bank during this year are at 6,71,376 crores, are lesser than what we had last year on account of the conscious, I will say, rundown of the unprofitable business and high cost liabilities which Mr. Mehta just now explained. Now coming to the income and expenses, that is profit and loss numbers, the total income of the bank improved by 6.07% during Q4, and during the whole year, it has improved by 3.58%. But if we come to the net interest income of the bank during the quarter improved from 3,172 crores to 3,330 crores on quarter basis, that is Q4 of FY15 and Q4 of FY16. And if you see the same number on year basis, the net interest income was 12,740 crores from the level of 13,187 crores. We'll see the numbers, how it have come down in terms of the increase in slippages. The operating profit of the bank for this Q4 was 2,572 crores. as against 2,694 crores during last quarter. In the last financial year, the whole year operating profit was 8,816 crores. Again, number is less by 1,100 crores. Now, in terms of the operating profit and the total provisions taken, we know that the numbers in terms of NPAs have grown significantly. Will come down later in the slide. On account of various macroeconomic situation, we know the challenges which all the banks, public sector banks in particular, are facing in the current macroeconomic environment, and also the asset quality review which we had. So last quarter it was around 39,000 crores, slightly below that. We are at 40,521 crores. So as on 31st March 2016. So the slippages have substantially come down during the year, but the provision amount, if we see during the current quarter, was 5,803 crores as against 2,095 crores during the corresponding period, and the total 1 year provision was 14,211 crore, out of which the NPA provision for bad debts was 13,766 crores, out of which 4,880 crores during the current quarter. Now with these provision number, the bank has posted a negative net profit number of 3,230 crores for the quarter ended 31st March, and the yearly negative number of 5,396 crores. Now here, let me have the numbers in detail. These are the numbers which are for quarter and year end. The bank had hard choices as well as the soft choices, and during the year we have seen in Q3 we had taken the entire amount of asset quality provision during Q3 itself. Now Q4 also, there were number of provisions which are in terms of the previous year's provision were not taken off. One of the major provision which was always written about was on pension liabilities. That was 1,564 crores. That was not provided for, has been provided during the current quarter, and the emphasis of the bank had been on recoveries and upgradations. Q4, at the net level, we have seen that the recoveries and upgradations were 3,200 crores, as in the opening remark Mr. Mehta advised. So the recoveries have picked up. We have gone into each and every larger accounts of a particular cutoff and had the evaluation in terms of the provisioning requirement in each of the accounts. So whatever the Reserve Bank of India norms were requiring for the bank to provide for, we have provided, and on the basis of the estimation of such accounts, the provisions which are over and above Reserve Bank of India norms in terms of the bank's assessment, where we need to provide higher by an amount of more than 2,900 crores. So 2,900 crores is the provision amount which has been taken by the bank during the quarter over and above Reserve Bank of India requirement. So 2,900 and 1,564 crores makes to 4,464 crores, which could have been, had the bank gone for the soft choice.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.